Hello there, this is fairbinaryoptions.com. So let's write on the screen where we are and what the analysis would be today. So www.fairbinaryoptions.com. What I would like to do here is to take a look at the euro and the Australian dollar, which is quite a currency pair that we didn't analyze for some time now. And the reason for it is that the market is forming a so-called non-limiting triangle at the end of a terminal impulsive move. Now the terminal impulsive move is the favored corrective wave that doesn't really damage the waves, if you want, the price level. So this scenario is quite nice from my point of view. Now I would say that the whole pattern that we are hunting here is nothing but flat. If you go on the Binary Options Academy project that we have on the website, you will see that this kind of flat is actually being called a flat here with a C failure, and this C failure here comes in the way of a terminal impulsive move. So A, B, and C and the market should fly higher from this moment of time. I would say that the terminal impulsive move starts from this moment on, and it goes like this. This to be first wave, then the second wave, then the third wave here, then the fourth, then the fifth. Now in a terminal impulsive move, like in any other impulsive moves, actually the fifth wave cannot be the long or bigger than the third wave, or the third wave cannot be the shortest one. And therefore, just like that, we have the possibility of measuring the invalidation of this whole scenario. Now if this is the third wave to the downside, let's change the color for it. Let's make it blue, and then projecting this third wave to the downside by the time that the fourth wave ends, probably the fourth wave ended here, then we will have as an invalidation somewhere around 143 level for the whole pair, and that would cast, let's say, a shadow of doubt on this scenario. But other than that, I would say that we have a non-limiting triangle. So 1, 2, 3, 4, 5, and the fifth wave to end here. Now this non-limiting triangle is quite an interesting one, because, and for that we need to go on the lower time frames. If you go on the 4-hour chart here, this is the triangle that I'm interested in. This is the triangle that I'm interested in, and I would say that the market from this moment of time, it is going like this. Let me delete this one. It is going with the first wave to the downside. Let me take a polyline. So this to be the first wave to the downside. It needs to be the biggest one. It needs to be the biggest wave. It needs to be the more than 161.8 when compared with the third wave to come. Well, this would be 1 and 2. This would be the third wave from my point of view. This would be the fourth, and that would be the triangle here. A, B, C, D, E with the fourth wave. And this to be the fifth wave. Now what do we know in this arrangement here? We also know that the market cannot go and form this fifth wave to the downside. So let's go and actually label this one as being the first wave. Then we have a second wave to the upside, still a corrective wave. Then we have a third wave to the downside, still a corrective wave. Then we have a fourth wave to the upside, still a corrective wave. All of them are corrective. And then we have the fifth wave to the downside, but the fifth wave, we just said that it's impossible to go. It is impossible to go and let's say to go and be bigger than the third wave. Now the fifth wave here, or the possible fifth wave, as you can see in this situation, it goes and breaks the levels in the previous third wave. That invalidates the third wave here, and it means that the second wave here is done all the way to the downside here, and the third wave is all the way to the downside here, like this. And the fourth wave will be with the triangle A, B, C, D, E. So this level that is going to be broken, this 2 to 4 trend line, let me take the 2 to 4 trend line from here to here like this. So the 2 to 4 trend line that is about to be broken would be good enough or a solid level for going and buy call options, because from this moment on or from that moment on, market will only look to the upside on the euro and Australian dollar pair. It is mandatory to look for the invalidation. Now if the market goes below the lows here 144, it's only 23 pips, then this whole scenario falls apart. But other than that, it is 1, 2, 3, 4, 5 and market breaking higher. So in conclusion, what I would like to do here is to buy call options, and of course I would choose 1 week expiration date or end of week expiration date when the market breaks what it is. This is 145 13, 135 17 for the call options on the euro and Australian dollar. So make sure you are preparing for buying call options, again, if the market doesn't break this one and reverses. If you are trading the spot market or the regular currency markets, then this would be a nice risk reward ratio for a pair that otherwise travels quite fast. Thank you very much for being here. Let's write on the screen the analysis on the pair today. So looking to buy call options with end of week or 1 week expiration date would be the recommendation for today, after price breaks 145.15 on a break above 1.4515. Thank you very much for being here again, and bye bye.